All right, welcome back, everyone, for the second show of the day on the Financial Summit Network. And we are back with Mark Wood. Mark, I think it's been a couple of weeks since we did do a show. I don't think I did a show with you while I was in Rotan. I don't remember anymore. And I was there for like 3 weeks. So maybe it's been a lot longer than even I thought it was. And I don't think anything has changed. I don't actually nothing has changed since I sent out that tweet that I was exiting my trading positions on November 22nd. And it is February 22nd. It's been 3 months. I got so much shit over that tweet by both the bulls and the bears. This is why I'm never going to tweet about the price of Bitcoin anymore. I learned my lesson. I thought I learned my lesson years ago, but I clearly had to re-educate myself on what happens when you tell the world whether you're long, short, neutral, or anything. And here we are at exactly the same price. In fact, lower than when I exited November 22nd. So I'm not going to talk about my analysis. I already did that this morning, and the analysis is the same as yesterday and the day before yesterday and the week before last week and the month before last month. So the floor is going to be yours from the moment we begin. So tell us what happened. I was over bullish this morning. Again, I don't know why I was so bullish this morning. We broke 99 for like a half a second, and now we're back 96 and probably going back to 95. So tell us what's going on, Mark.
Yeah, so I think one of the reasons that we haven't streamed is we've been busy. I've been a little bit busy, but also nothing has really happened. I mean, you track the daily stuff with Matt pretty regularly, and you and I try to take a little bit more of a macro look. However, I kind of did want to do a stream today because this weekly close, especially for CME, in my opinion, is going to be huge. And what I'm seeing right now is starting to put a probability on 90K. I was with you. I was bullish earlier in the day, seeing what I wanted to see for the weekly close. But we can talk about that. I'll show you guys exactly what I've been looking at for the past couple of weeks.
Right. So as you go to screen share, guys, so Mark has a Telegram channel with his signals of when you enter your own positions, long or short. So those that are interested, please go ahead and scan the QR code that you see on the screen in order to be in a Telegram group with Mark Wood. I should be in this Telegram group. I am not. I am just already overwhelmed with the amount of groups that I am in. So I am trying to stay sane and be in less groups. But this way, you guys can interact with Mark. I'm not really sure how this works. Me and technology have not been mixing well over the last 6 years. Prior to that, I was at the top of it, but not lately.
Right, and this is more for me. This is more of kind of like we were discussing with the producer. Like, since I'm not on as regularly every day, just for me to get some information in the channel at a little bit more regular update, just to see what I'm taking a look at. I might not necessarily say like recently. I have been pretty clear where there was a signal on MSR on a drop, and I'm pretty sure I dropped in the channel, hey, I'm buying some spot here. So it's not necessarily a in and out of trades. What I prefer to do is just to kind of like set up levels so that people can make their own decisions and maybe get a better idea of the several different things that I'm looking at to make a decision. So like when I'm trying to buy a dip, I personally am going to be looking probably at about 6 different things, not just MRI and Bollinger Bands, right? That'll be probably my first thing. But I really start digging into MSR. I just find it to be such an incredible tool, especially when prices are dropping into buy zones. And so I kind of show stuff like that in the channel. So take a look. I think it's fun and informative, and I'm happy to tweak it any way we want. So let me try to share my screen right now, and we can just jump right in. So what we are looking at currently is February's, plain and simple. And we can count these out, but I can just tell you straight away that 12 of 15 Februaries have been 12 of 15 Februaries have been positive. They've been green. And I'll add one more stat to that. If you look, let me get to my screen here so you can see my cursor. So these Februaries that have the circles, those are post-halving year Februaries. So we are 7 days away from a complete anomaly, and I'll explain why. So February 2013 was a positive month, and I can zoom in here so we can see closer, of 66%, 65%, 66%. That was after the 2012 halving. We'll scroll forward to the 2017 February, which came after the 2016 halving. That was a 25% February. And again, in February 2021, after the 2020 halving, was 39%. I did the average. I can't remember what the average was, but this is one thing that I've done. One of the things I like to do just to stay conservative is take the smallest of the moves, okay? So the smallest of the moves was 25%. So, well, first of all, in order to get a positive February straight away, we need to see the price above $103,000 in the next week. And I'm starting to become skeptical that that's actually going to happen. And this is the 24, 25% projection. In order just to get the smallest post-halving year February move, we would need to see the price of Bitcoin at $126,000 in 7 days. I don't see that happening at all. So we're kind of looking at an anomaly, and we're going against stats currently with, as I said before, 12 or 15 Februaries being positive. So currently we're sitting negative. I'm not overly concerned, but this is not what I wanted to see as a weekly close, and I'll explain why in a minute. So Tone, are you there? Or are you out and about?
I'm here.
Okay, I'm just wondering, do you have any opinions on this? Anything to input?
I mean, you mind like zooming in on the current candles?
Yeah. Here we go.
So I'm with you. I'm not happy with this close, but as long as this close is above that moving average of yours, it's good enough. Obviously, the close is lower than last month's close. If it's a red candle, it's lower by default, but it's still the second highest monthly close in history, and that's bullish. The current monthly low is above last month's monthly low. That's bullish. So overall, it's bullish, and there's still 8 days left this month, or like 6 days left. It's a short month. We can still, close decently at the end of the month. We can still rally back to 99, close to 100 by end of month. And let's see how next month goes. I think with the spring coming in, people tend to be a lot more bullish in the spring. The sell in May and go away is a real thing, but markets pump into May. So I don't, while the close doesn't look good for the end of the month, it's perfectly within reason. Now, if the opposite happens, if we close the month below 95,000, then it would be concerning.
Yes, a little bit. So now, just to be clear, the two moving averages that y'all are seeing right now, are what I consider to be short-term moving averages, but we are on the monthly time frame. So in a bull market, the orange is the 8 EMA, and the red is a 3 EMA. These are just Fibonacci numbers. That's the reason that I'm using them. You can substitute the 3 with a 5. I just prefer the 3, but just to eliminate a little bit of panic, this market could potentially still drop to 85K and hold the bullish structure. I would be a little bit worried about that if it does happen, because there's something I'm watching on weekly that is becoming a little bit time based. But let's just go back. Let's just go back to this glorious run in 2016, and we can see anytime during the bull run, once the moving average is crossed here in October 2015, once we got this really bullish cross and a close above, and even on a high time frame like this, I'm probably going to look for at least 2 closes above. But when you get 3 closes above on a monthly, that's pretty strong confirmation. And then we can see 1, 2, 3, 4, 5, 6, 7, 8. Okay, this is part of the reason that this market was so healthy. All of these tests, and these were all amidst those 35% drops that Bitcoin had during this entire parabolic run. So, and going back even to this market in 2021, we can see, yeah, there were dips below, but one of my rules is I need 2 to 3 closes below to consider a moving average lost. And this gave us 2, but still the price basically still marched along after picking up the 8 EMA. Right here was an anomaly. So, we are definitely going to be seeing anomalies from prior patterns. One of my specialties, I think, is identifying when that's happening, which I'm seeing right now with this current February. This is an anomaly. This current February, as it stands right now, is an anomaly. But this was mega bullish right here. All of this time spent testing the orange moving average without closing below it, in my opinion, still has plenty of fuel to propel the price well above $110,000. I don't think that after consolidating from March until October, basically in the range of 60,000 to 70,000, that people are going to be happy to take profits at $100,000 that were accumulating during this 6-8 month period. I believe that they're hoping at least to sell a little bit higher, as am I. So we're still seeing the price above the shortest term moving average that I track, really, which is not bearish at all. And if we turn on the MRI, this is going to be moving. We're on a green 5 candle. It's going to be moving to a green 6 with the potential, though, to flip to a red 1. It's probably going to fluctuate if the price is below 96,000. So this is something to pay attention to, as are the oscillators. The RSI is turned down. The stochastic RSI is turned down. This is a Fisher. It's still green. We're still okay there. And these are the stochastics. They are still rising high. I don't care at all that they're reading 86. It can stay in this zone for a year. Okay, stochastics can stay in the zone for a year. Ultimately, it would be fantastic to see this RSI bounce off of the moving average, even dip below it, just like we saw in these ever since this market got bullish, and then reverse. But that might actually require still more consolidation and a drop down to 85, 90K. Thoughts or opinions on that idea, Tone?
No, sorry, Mark. I was actually replying to a bunch of text messages, so
Nope.
I really
Okay.
should be paying attention, but I
You don't have
just got so much going on. So if you could, if you have something important to say that you need me to pay attention to, and I know this is bad, but I just got, I'm sorry, man. I'm just overwhelmed with work. And just say, hey, Tone, can you just pay attention to what I'm about to say? And then I will. And then I'll follow up with a question on it.
Okay, got it.
But I just needed to do a show so people can hear your thoughts. But in the background, I am doing work.
No problem. I got it. I got it covered. And we are going to
Thanks.
get we are going to get to the weekly, because the weekly to me is incredibly important. CME is going to give us some clues, and I will also wait for spot to close on Sunday. But as things are standing now with the price at 96.7, there are two moving averages that could confirm crossed that it's not going to be bullish. It's not going to be market threatening. It is probably going to push the price down closer to 90K though, if that happens, and we will get to that. I'm working my way to that. Currently, what we're looking at is the 2-month chart, which is going to also going to close in 7 days. So here's just some interesting always and never. I love always and nevers because one day they will break. But the current candle count, I will zoom in, for MRI is a green 4. It's kind of shrouded by the orange EMA. And as we can see, the price is clearly trending above the top Bollinger Band. I do not like that the wick above is longer than the candle body. I don't like that. It's definitely something to pay attention to. And I don't know, for the people who are around for our very, very first stream, this candle was closing right here in March. And I remember saying, hey, this market, it's cooked for a little while. It's probably going to go sideways, and we're probably going to be seeing a significant drop. That was when the price was at $60,000, and we dropped down to $50,000. And if we can see, touching this orange moving average. So now on a 2-month chart, the orange moving average is going to be even more of like a short-term moving average. So this suggests that the price could drop as far as 70K and still maintain a fairly bullish structure. If we go back to 2016 market, we can see several tags of this orange moving average as well. Now, I don't necessarily want to see the price drop to 70,000, because at that point, I think we would see a 55 EMA, 55 SMA cross on the weekly. That will be bearish and potentially end the market. I'm not calling for a market top at all. I'm just saying a drop that low presently might not be the greatest thing. So here's the always and never. First of all, this green 3 candle closing in December or November closed above the top band, which tells us to look for a new high potentially on the next candle, which we did get. It was barely a new high, but it was a new high. So that TA played out. Now, this current candle closing above $93,600, that will adjust a little bit. Even with this potential topping look to it, I'm still going to say it's probable to see a new all-time high in March or April. And also just going with Q1 stats. Q1 is typically very, very bullish for Bitcoin. It just is. So the end of the month is going to be interesting. If this candle closes red inside of the top band, so we're talking about below $93,000, it's going to look something like this candle here, which will be a little bit concerning. The other thing is we've never seen a green 4 that closed above the top band that didn't see another high. Okay, I couldn't find one instance. Here's the green 1, 2. There's a green 4 closing above the top band. I'll zoom in a little bit. This is in September of 2017, $6,500. The next one popped all the way to 20K. So again, it would be an anomaly to have an MRI green 4 candle close above the top band and not see a new high in the following candle. So we will be watching this closely. The next thing, I'm just going to go down the line here. So MSR is failing on lower time frames. I just going along with my bull market strategy. I'm going to give full disclosure. I bought a very small amount, literally a couple $100. It's not a big buy, right here, at the support of $97,000. And as you can see, I should have been a little bit more patient because the price is dipping. But let me show what I was looking at on the 4-hour chart.
Oh yeah, and real quick, I just want to say one quick thing.
Go for it.
I actually didn't realize the price of Bitcoin was dropping this much. I think it was on yesterday's channel or on today's channel, yesterday's morning show or today's morning show. I don't remember which one anymore. Where in the first 30 minutes, Bitcoin was rising like crazy, and the stock market was crashing during those 30 minutes. And I said this is not normal and is not going to continue. And you see it right now. The stock market is crashing massively, and Bitcoin is crashing as well. And I can see on yesterday's candle, the stock market was down and Bitcoin was up. And today, everything is, the world is back to its normal place. And the other thing is Max Payne. I talked about it yesterday, but I didn't talk about it today. Max Payne had Bitcoin way lower than the price yesterday. This morning, prices were going even higher, but Max Payne was very low. And like clockwork, here we are going into Max Payne. The Max Payne for IBIT is, I think, 54.50. And this morning we were trading at 56.50, which is significantly higher than 54.50. And here we are with an hour or two to go in the market. And where's the price? Of course, it's at 54.50. So look, Max Payne is at $55 for the rest of the year. And it's possible we're not going anywhere. It is, people underestimate Max Payne so much that I constantly, and I forget to say it because in the back of my mind it's engraved. I just forget to tell people because for me, Max Payne is just always something to be aware of. And that's why there's shows where I don't mention it, because there are whole strategies surrounding Max Payne. And here we are week after week after week. There's been 1 week in like 2 months where Max Payne failed, but it works like 80, 90% of the time.
So it would be interesting to take a look really quick. I'm curious to see what DXY is doing today. Just take a quick look at that. 106.5. So it's not really doing anything significant. It's actually been falling. So the S&P dropping is probably not super related to anything going on with DXY, I would say. So this is the MSR on the 4-hour chart. Socrates, Tyler, pretty much created MSR for Bitcoin specifically on the 4-hour. I love it on any time frame. I don't care. So this is something, these are things that I try to drop in the Telegram channel. This thumbs up is just showing there is a trend line that goes all the way back here. This trend line going back to December, middle December, peaking at 108,000. It's been an interesting trend line to follow. As you can see, especially, it's like the longest bump and run in the history of bump and runs. And if I put it on daily, this trend line has not yet been broken. This is the 4-hour chart. But this was a nice buy off the trend line to get a decent bounce with a W bottom. And what I will do is I will put arrows on MSR marking my areas of interest. I literally bought this low perfectly on February 3rd at around $91,000. And if the price goes lower, I'm not selling. I'm just going to continue to accumulate. These are just small spot buys. The majority of the spot was bought a long time ago. But 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 tags of this trend line right here. And as we can see, on February 19th, February 18th, price dropped to the shallowest level that I was looking for it to drop. And I bought a little bit of spot right there as well. So now I will adjust these arrows. This dark blue moving average is a very key moving average that sitting currently at $94,000. If that gets flipped to resistance, then higher time frame TA is going to take over, and I think price is going to $89,000, $90,000. But these are just all signals that MSR generates, and if you understand how this indicator works, what happened right here as the price was slowly drifting down is something that Tyler Socrates deemed a sky squeeze as the sky, this gray area, comes down to the beach. I have been tracking this indicator for years. What happens almost inevitably, especially if the trend is freshly bullish, which this is the price is going to get pulled up to the direction of the sky once it starts dipping into these very low risk ranges right here. So we got that perfect play, and this guy got front run, which was actually right around the 200 SMA on the 4-hour, which I also dropped in that Telegram channel. So seeing the price rejected at $99,000 was no surprise to me at all. So now here's another thing. I can turn MSR off really quickly. So there is a moving average cross. There it is. Right here between the yellow 21 and the 55 EMA, the green 55 EMA. When Bitcoin is trying to establish itself as bullish, the bears are going to do everything they possibly can to dismantle this cross on the 4-hour time frame. And as we can see right here, back in February 16th, just a few days ago, the same thing happened. We almost got this cross as the price was closing many candles above 97, and it got driven down. So again, this cross is going to be a fail. It's going to be a swing failure pattern, and we're watching the price drop fairly significantly right now. So the bears are winning this battle. That is kind of my overall MSR look. Really quick, we're just going to take a look at Bitcoin dominance without the stable coins. And this red horizontal that I have marked off continues to be the top. This is a pretty strong wick that popped up to 68%. Yet the candle still closed below this red horizontal. I've had this eyeball drawn there, kind of expecting. Tone and I mentioned this in previous streams. Did we think dominance was going higher? Yes, we did. And it did. And it happened with the price dropping, not with the price pumping this time. So what will be interesting to see is if Bitcoin recovers, I would expect this weekly candle that was printed a few candles ago to be a longer term top and dominance to start dropping. However, if Bitcoin begins to lose 65,000, maybe 95,000, 94,000, we're going to see this dominance rise again. And it will begin to rise above 66. And we can kind of look that there's some fairly open sky. Horizontally, there's some resistance a little bit higher, but the altcoin market is still going to struggle regardless, as long as dominance is sitting in this 65% range. Moving on quickly. So this is simple Heikin-Ashi investor mode with 2 moving averages. And I've mentioned this on prior streams. The 2 moving averages are a 12 and a 26 EMA with Heikin-Ashi candles. I like to look at it on 4-day or 5-day. Let's take a look at 4-day. Generally speaking, the black is an area to consider buying a dip. And we can look at this sideways consolidation right here in June of 2020. And we can see anytime the black was purchased, as long as the red is still crossed above it, ended up being a good buy for the long run. So we are being told currently, hey, this area of $94,000, $95,000 is still a dip until it's not. Now, if 93K is lost, which sits right where that dark blue moving average is, where I showed on 4 hour, and I love when I get confirmation and confluence of two completely different indicators giving me the exact same price range. I have way more confidence in what I'm looking at that point. So this is showing us to get a little bit defensive if we're getting regular candles closing below $94,000. And how this system works is you wait for the red to cross below the black, and the first red candle to do that, you consider selling rallies into the cross. You don't want to exit completely because there typically is going to be a bounce. So this area right here from June until September was very difficult to navigate if only using the system. It would have been whipping you around a little bit. And actually this setup does not whip you around very much, which is one of the reasons I like it. So keeping an eye on this, not dead yet, in the words of Monty Python, but definitely something to pay attention to. Now, here's Consensio. I've got it on the 5-day chart, and I'm looking at the future CME. One thing that I noticed today, which is going to also agree with some weekly analysis, is if I take the price off, come on, we can clearly see this is the short term. The gray is the short term moving average. The blue is the intermediate. The yellow is the 21 EMA, which I added to Consensio. The black is the long-term moving average, 30 SMA. When the blue is crossed by the gray, with some historical examples to look at, the price typically does get pushed down to the yellow moving average, which is currently sitting at $90,000. Here is an example of the right here in mid-January of 2024 is an example of the price not quite dipping down to the yellow. So we are getting that same signal here. This is not a 100% signal. This is just something to pay attention to, but there's very simple TA. It's easy as can be. If the price does not start swinging above $97,900, let's just call it $98,000 on CME high time frames. In other words, if we're not seeing daily candles close above $98,000 into next week, this becomes a significantly higher probability at $90,000. Here, back here is an excellent example. This is May 2023. We get the cross below. It continues to reject the price, and the yellow 21 is support. It's a buy. The yellow 21 is always going to be a buy until it's not. And then here's one more example of almost getting whipped out of Consensio in this consolidation period. But if you remember, the Heikinashi was telling us to stay in and buy these dips. That's why I personally like having a few different systems. It can be confusing to people, but if you start to understand how to get the strongest signals from these systems, it can be incredibly useful. Now, really quick, we'll take a look at weekly. This is what Tyler Jenks liked. And weekly is also showing that the gray moving average has crossed below the blue. Did not cross up here in early January, but it is clearly crossed. And what I'm seeing on the weekly right now is the price showing us, yes, this is now resistance. We're getting We're 3 hours away from getting a third candle closing below this intermediate moving average. And if you're wondering what the blue is, I have it set at 10. Gray is 3 simple moving average. Blue is 10. Black is 30. And the yellow is a 21 EMA. So if this candle today closes below $99,000, I am going to continue to have a high probability until proven otherwise that $91,000 on CME is coming. So we shall see. This is one of the reasons that this weekly close is so important. And the other system that I use is going to give us the exact same information. We're going to take a look at that right now. But before we do, let's just take a look at a couple of trend lines. This trend line is just connecting the highs from December 2024. And it's the one that we were looking on MSR. It's just a little bit easier to see right now. And again, like I said, if I put this on daily, this trend line has still not been broken. Here, I'll do it right now. This trend line has still not been broken with a daily candle closing below it. All of these tags, it's incredible. And I'm going to just do a side note real quick. So Peter Brandt, I follow him on Twitter. Tons of respect.
Yeah. Hey, Mark. Just real quick before you go into that. Like, this trend line might not be broken, but does it really matter? Because each time the trend line gets hit, the price goes lower and lower and lower, right? So if the trend continues, we could be at $52,000 without that trend line breaking. So I don't see how this is bullish, even though it's not breaking.
I'm not seeing it. I am not seeing it as bullish as well. And I don't even know if it's super relevant, Tone. Although what I did right here is I was watching this as a falling wedge, and it's a little bit more clear. It's a little bit more clear on higher time frames. It did get broken up here, which I don't like. But then just yesterday, since we had more information to go with, I added this top trend line, and clearly, it is offering resistance. So this is what I was going to say about Peter Brandt. He's an OG, old school trader, and has survived these markets for decades. I listen to everything he says, but a couple weeks ago he put out a tweet saying anyone who looks at trend lines is not worth following. And man, I took offense to that. Trend lines are not anything that I live or die by, but man, they can guide you. If you find a solid triangle trend line, it can guide you to look for volatility, or look to where to look for a breakout. And it was just a really interesting comment that he had that I just happened to disagree with. To me, these trend lines have been guiding the price, but I can make this super simple. I just need to put on one moving average.
Yeah, I think that statement is too general and too broad, right? So for one, I hate wedges because wedges involve two trend lines that can constantly be adjusted.
Yeah.
But I love ascending and descending triangles because they involve a horizontal trend line that is not subjective, that is not adjustable, right? So it really depends on how you use trend lines. So yes, there are TA traders that use trend lines that are completely silly and are not worth following, but there is a way to use trend lines that is actually useful. And that's also, I don't know if Peter Brandt believes that looking at an ascending and descending triangle is looking at trend lines or not. It is trend lines, but it's trend lines within a pattern. So I think that statement is just, it needs a lot more explanation as to what he actually means.
Yeah, I agree. And what you're saying, Tone, is absolutely right. But see, that's something so when I draw a trend line, I draw it with the intent that it's probably going to get adjusted. I just use it as a guide. I don't use it to make any strong decisions. but and I typically will also draw the absolute most conservative trend line I can, which is what this one is here, right? Now, if I can actually bring this at this point out to here just to get this wick and this wick and this wick. However, I still want to get as many touches as possible. We still want as many touches. So without crossing the candle bodies, this is still more accurate to me. And so now this is going to say, hey, until the price is again back above, let's say $98,500, we're not going to consider any kind of bullish activity. But I didn't really need this trend line. I posted this in Telegram channels. Hey, this is the 200 simple moving average. It is always going to be relevant after coming out of deep dips. And we can see here that after strong drops, it is not easy at all to pick up for any kind of long-term action as support. This was December, late December of 2024. One closed back above it and then back down to the lows. This could not sustain more than 2-3 closes above it, back down to the lows. This was the closest chance here in early January, but still reversed and back down to the lows. So it was only this run starting in the middle of January where you got a strong confirmation right here on this candle in January 16th. That reversal candle is saying to the algorithms, in my opinion, okay, 200 is going to be support for a while. So this allowed a lot more sustained move to actually print a new all-time high, come down and test it, held, lower high, and now it doesn't hold anymore. So my TA was 100K was going to get sold by the traders no matter how bullish price action was. And not only was that accurate, but it actually got front run. Traders bailed before the price could even get up there. They were already taking profit. And, you know, this is only the 4-hour chart, but as here we are on February 21, and the price is in the exact same range as it was February 2nd. So Tone and I, like we said, we haven't done a stream in 3 weeks, and the price hasn't done anything. It's literally at the exact same price as it was almost 3 weeks ago. So let me put this chart back on the weekly though, because I do want to show what I am watching as far as the close goes. And I'm going
Mark,
to go.
Mark, just want to jump in real quick again. I am very, very concerned over the price action in the last 3 hours since the morning show, right? We were above 99,000 this morning at market open, and we're now we're below 96 already, right? This is very concerning. We have broken 3 levels of support in the last few hours to the downside. The market is about to close. We're about to go into the weekend. Most people know I am always more bearish on the price of Bitcoin over the weekend than I am bullish. And this is super concerning.
I agree. And as we're seeing right here, spot is going to look exactly the same, but CME is going to give us an early clue. So earlier today, just today, when the price was sitting closer to here, this $99,500, these moving averages were not crossed. These are EMAs, and this is one of the reasons I love EMAs. They are going to react to the current price action, and especially if it's a 3 EMA, which this red is going to be very reactive. So it went from bouncing up and looking very bullish to cross below. So now, here is my very simple TA, very simple rules. 3 closes below the 8 EMA consecutively is going to put a very high probability, almost 100%. Nothing is 100%. I'm comfortable saying 75%, but I believe statistically it's higher than that. It's going to put a high probability on the 21 EMA, which is sitting currently at 90.7 on CME. Okay. Now, when you get these moving averages crossed, that increases the probability significantly. And here's an example right here. Now, the MAs were very close to each other, but here's the cross, and price actually got driven well below the 21 EMA. I'm talking about in July. But the more relevant TA, I think, is right here in April after the initial high at 74K. We got this cross, and we got this one candle just barely front running the 21 EMA. Right here was incredibly bullish. This is what I was looking for. I was looking for the moving average to come as close as possible and then bounce off of the orange, and that is an incredibly bullish sign when that happens. But this weekly candle would have to close green around 90.
Mark, can you just like mention the price and the date, because there are people listening to us and not watching. So
Yeah.
when you point to a candle, just mention price and time.
Yes, I will. And what the time period I am looking at is late January 22 and 2024. This weekly candle was a nice reversal candle, and there was only one close below the orange. Only one close. No moving average cross, and off price went. Now, with a little bit more price history on the spot chart, I can say this definitively, I believe. And I'm on the index. So I'm dealing with as much history as I possibly can. I don't believe there is one instance throughout history where, and look, I can show several examples of this in 2016. Like if you want to learn structure and technical analysis, study Bitcoin from January 2016 until the top, or maybe even earlier, digging out of the bear market. But right here, I will zoom in. March 13th, 2017, cross below, tag the yellow, no closes below, we're good to go. Next level up, please. Right here in July of 2017.
Hey, Mark, turn the MRI on right there. Boom. The
Right
3,000 and 5,000. Those were some of my more epic calls at the time.
Right there. This top.
Yep.
Yeah.
Yep. I called that top to perfection, and I called the $5,000 top to perfection on using the daily chart.
Up here, this top here.
Yep. The MRI top daily on that day.
So the point being that here's a cross in September of 2017 where the moving averages didn't cross, but the price had already made the dip. It had already made the dip, and that was a buy. Now, this was end of trend. Okay, so even after 20K, the TA is always buy the yellow 21, always buy the yellow 21 until it doesn't work anymore. And had you done that off the 20K top, yes, the price would have dipped below, but this bounce into the resistance was 25%. That's not a bad swing trade. It's not a bad weekly trade. But when you start seeing price rejecting at these moving averages after they've crossed, that is not a good sign. That is basically saying the bull market is over. Yeah, except with the exception if I go back to here, this is where the anomaly was, because we actually lost the bots, the algos, the traders. Everyone has gotten smarter, and they're going to figure out ways to whip people out of their positions. And this area right here, basically from June 2024 until October 2024, probably took a lot of people's money, because no matter how strong your system is, you're going to get whipped around unless you are like a very crafty, skilled day trader or scalper. So, being said, I'm not overly concerned with a drop down to 90K or even a drop lower. But what I am seeing currently on the spot and the CME chart is a very high probability that the price is still going to get driven down to the $90,000 range, possibly lower. That's just kind of the minimum move. The 21 EMA is just the minimum move, right? So,
Dude, Mark, we are continuing to crash, man. We went from closing the day as pretty much a 3-week high on the daily to now closing a 5 or a 6-week low.
so
This is very bad. Like very bad. And someone in the chat pointed out this morning over $100 million in short positions was liquidated. That's massive. That's massive for possibility to go way lower, right? Like once the shorts get wiped out, boom, there's no floor to buy back. Like the shorts are important because when the shorts are profiting, there is more buyers in the market. But if the shorts are non-existent, it opens up the floor to go way lower.
okay, so this is actually perfect. I want to show y'all. I've got a friend down in Florida. I don't think he's watching this stream, but he and I have been doing this for years and years. And I will put MRI on. I'm on a very, very low time frame. I will go to the 13, 15, or 21 minutes, sometimes the 10-minute with MSR. So we are looking at, so it's a red star candle after a 9, after an MRI acceleration. Okay, so I'm not interested in that yet, but let me show how MSR works. This is a fresh bullish trend. You have to be reminded. We have to remind ourselves this is only the 15-minute chart. No massive decisions. This is scalping. This is like a quick day trade or a short scalp. But when you're in a fresh bullish trend, which this is, this 15-minute flipped bullish, this area is a take profit zone up here, top of the skies when you start taking profits. So it worked exactly as it should. And then you start looking to buy a dip. This was a first area, which is actually where I did buy some earlier today. But now we are starting to get into very low risk. This area where this blue dotted is, it's called the buoy. It's currently sitting at $95,000. Wait, let's just call it 95.1. Usually price will wick below it. So what I would possibly do, and maybe we can check in on the stream, I don't know if we're going to have enough time, is wait for a second run to an MRI buy, a second consecutive run. And if the price is sitting anywhere between 95 all the way down to 94, it would be a buy. It's not a strong buy. It's not like a lifetime buy. It's just, hey, if you're accumulating Bitcoin in the bull market, this is a decent little dip to buy. Or if you're trying to do a quick day trade or scalp, we are getting in the very, very, very low risk area. I don't know the probabilities of the statistics with MSR, but I would say that down to here, $94,000, probably you're starting to get into 5% or less chance of the price going lower. However, this wide berth here on the red.
Sorry, I gotta intervene here.
Go for it.
On that specific time frame going lower, right?
Yes.
So you're looking for a bounce. Now
Yes.
this is a 15-minute time frame. So
Yes.
by tomorrow morning, we could be way lower.
Yes, absolutely, 100%. Because what I'm looking at, so we can see here, this dark blue moving average is kind of like the bottom dweller. I call this the bottom dweller. It's sitting at $97,000. So once that began to flip to resistance, which you can see very clearly, this is one of the reasons I just love moving averages. I've got the red and the orange crossing below, and every bounce is getting sold. This is saying, okay, this is resistance now. Clears a bell. Once the yellow crosses below, now it's going to be even stronger resistance. So all that I would look for on a bounce, like let's say we get the best case scenario. Let's say we get a secondary MRI buy at $94,000 in this low risk zone. I would only be looking for a bounce of maybe 2% as a minimum move, 3.5% as a maximum move, right? So like I said, you have to understand this TA is relevant to the time frame. So a scalper who's going to be using, fairly high leverage, they can make incredible use of this. But for the higher time frames on the 4-hour chart, we are seeing the prices starting to drop into my highest level of a dip zone, which is going to be basically sitting right where it looked. And this is what I love. When I get confluence from two completely different time frames with similar TA, I just have a little bit more confidence in what I'm looking at. So we've got support here at 93.7 to 94K. All right, that is the top layer of where to consider buying a dip.
Right, but Mark, I would hate that support, right? Because that support is the prior swing low. So this is why, like, it could, like for my trading, that would be terrible. I mean, this is why I know you've caught a lot of these moves right at the lows, but for me, I would never buy that low.
Yeah, I know, Tom, and I understand. I understand what you're saying, and I'm trying to be very clear. This isn't necessarily a quote trading strategy. To me, this is more of a bull market buy the dip strategy where you're just nibbling at lows. And the other thing is, I am very aware. So now, here's one thing that's interesting to me. I've been watching this very closely. I keep talking about the 21 EMA. We're going to go take a look at it on the weekly chart really quick. Because that is currently sitting at $89,600. That's right here. Now I'm going to go back to MSR 4-hour. And we are going to see the very bottom of this bullish trend. And this is a fresh trend on the 4-hour. It became bullish on January 20th, and ironically has done nothing but drop the price ever since then. But that's not what the indicator is telling us. We still can make decisions. You're still taking profit anytime the price is up to this area. The point is this. The bottom where we're getting into the absolute lowest possible risk on the 4-hour chart is at $90,000, which is lining up very, very closely with that weekly 21. So the lower the price dips into this range, the more confidence I'm going to have, and the larger the buys will be. Not necessarily with leverage. You can use leverage when you have to start getting in those low risk where you're only talking about 2%, 3%, 4% probability of the price moving against you. And if you're on leverage, you have to have a tight stop and just take the loss if it's wrong. So if you look, I have had an arrow established between $89,000 and $90,000 going back to early February. I've been waiting for the price to drop there all month long, making these really small buys here at 92, at 93, at 97. Even though my TA was telling me, hey, I still think the price is going to be going to 89. It's just you never know when Bitcoin is going to reverse and land $10,000 above where you're wanting to buy. So I'm just trying to give insight into how I've been able to use these ideas to accumulate spot in a very methodical way. Now, most of my buys were significantly lower in the bear market, but still using this exact same type TA. So as Tone was saying, this 4-hour candle has just blasted through everything, and I am going to be looking to these prior lows at $94,000. That is not going to be a strong weekly close for CME at all. It's going to put. I'm feeling fairly confident that the price is going to go close to $90,000 with this close. Are you feeling? Do you have the same idea there?
I'm sorry, Mark. I was trying to figure out the sound issues.
Yeah.
Apparently, we're very choppy. It could be that one of my microphones was dying on battery, so I was completely distracted in the last 3 minutes.
Okay. Really quick, we'll move on to the daily Ichimoku cloud. You can see these two giant green arrows. I'm still giving very, very strong consideration to, I'm not a fractals person, but I am a patterns person. The markets will repeat patterns over and over and over again. And we have a very clear pattern, except that we are deviating from it a little bit. We had this dip into the cloud in late January of 2024, down to a price of $38,000, and which led to a nice rebound and inverted head and shoulders, and then the price took off. What's happening right now, and so if I zoom in this time period, we can see the TK, the blue and the red, had a bearish cross as the price was dipping in, and then once it climbed back out of the cloud and established it as support, it was gone. So it's not going to be. It's going to rhyme. It's not going to look the same, but we can see one deviation that is starting to happen is the Tenkan and the Kijun, they're starting to cross into the cloud, and it is still resistance. So that is not bullish. We need these daily closes back above $100,000 minimum, which is the 200 SMA on the 4-hour chart. So again, we have confluence and resistance clear as a bell. It was clear as a bell to me that $100,000 was going to be resistance, technical resistance, not just because it was a nice even round number that's going to get sold into. That just adds to the fuel. So I still think that this is a possibility, but the price could dig a little bit deeper into the cloud. Right about there is where that weekly 21 EMA is. And then we will look for closes back above the cloud to potentially get bullish again. This is something that I was looking at that is a little bit concerning, a little bit. 16 days left. I'm on the 3-week chart, so I'm looking at RSI. This main trend line is kind of my guide. I'm looking for the market to top, potentially top, once this trend line, once the RSI begins to get close to this trend line, let's say right around the mid-80s. However, what we're seeing right now is a little bit concerning because we're getting a lower high on the RSI, and it is crossing below this gray moving average that I have set up on the RSI as the price has printed a higher high from that first peak. So the first, let me get rid of the drawings. The first peak of that RSI was with the price at $72,000. We got a run all the way up to 110K with a much lower peak on the 3-week chart. And this is not a low time frame. So we can see here in May of 2024, when the RSI began to dip below this gray moving average, the price of Bitcoin was at $66,000 and it ended up bottoming at $50,000. So with this RSI in 2 weeks closed, this is going to adjust. If we have a bullish rebound off of 90K or whatever, we could see this RSI back above the moving average before the close. However, if the 3-week closes with this below and the price still holding around $95,000, we might have to consider the price dropping into the 80Ks. Strong opinion on that, Tone, or are you busy?
I'm busy, sorry.
No problem. I'm almost done. But really quick, this is my fib extensions chart. So this has kind of been the outline, my market outline from the very beginning. The 1.618, this is probably the hardest Bitcoin has struggled in history to fully breach above the 1.618. Now, this Fibonacci is taken from the exact 69K top in 2021 to the exact bottom. Okay, that puts the 1618 Fibonacci right at $102,000. And as we can see, I'm on the weekly chart. Only 1 week has closed above there. 1 week, and that was in early December. And this 1.414 fib has been the support, and that is sitting right at $91,000. That's right where that weekly 21 EMA is. So if we're going to lose that 21 EMA, it's going to get concerning because we are going to lose this parabola right here. I can't really stretch this parabola out any more than I have. Will that signal end of trend? Maybe. Maybe. There is a lot of open territory not covered between basically this breakout area of 70,000 up to $90,000. So I'm not super bullish if $90,000 is lost. Hey Tone, really quick, can you pay attention to this because I'm curious to get your idea about this parabola. You see the blue parabola?
Yes.
Okay, so something that I have watched and I've seen it in so many assets. I could show you one of the clearest examples of this on Amazon way back in the early days.
Yeah, we discussed it. We've pulled them up before.
An asset trading sideways into a parabola is potentially mega bullish. Mega bullish. However,
yeah, if you put this on a monthly chart, you're probably gonna have 2 hits. You'll probably have the October 2023 touch perfectly as well.
Yeah, I got a touch here, and I got a touch in August 24. Got a couple touches, but
yeah.
Okay, so
what you're touching it now, actually, yeah.
So we're getting that signal. We are getting the price running straight into the parabola, into support. Typically, what I have drawn here is what Bitcoin has done around the 618, which has touched around and then made a strong run up to or significantly above the 2. In the earlier markets, it went well above it, but it always came back down. So even if the price pops up here, I would still not be surprised to see one more drop into 100K. However, what might be happening right now is this sideways consolidation could potentially move the price all the way back up here. And really quick, let's take a look, because this is something I want to talk about outside of Bitcoin. I've been watching SCMI. I'm sorry, SMCI, super microcomputer. This is
I've never heard of this.
This is amazing. Let me get rid of the unnecessary.
What is it?
It's a microcomputer chip.
Yeah, you know what? I was gonna ask you a question, and now it's very clear. My question to you was gonna be, before you pulled up this chart, was gonna be, yes, you're expecting a bounce off the parabola, but what happens when a parabola is lost? Because in 2 weeks, we can lose the parabola.
I mean, it's not good. Like sometimes 50% drop is a minimum move out of a parabola. Microsoft broke a parabola and still somehow managed to hold on to it, which is a bit of an anomaly. But look at this, Tone. This is beautiful. This is like long-term technical analysis played out to a T. This parabola began in 2018. Oh, look, Tone. Look at this. This is exactly what I'm talking about.
Mm-hmm.
From June 2023 until December, the price did nothing but basically trade sideways into the parabola, and then look what happened. It launched from $32 to the all-time high of 123. But
That's a massive move, but look what happened after. It went to $16.
85%, which is exactly what we've seen out of Bitcoin. How many times? 2 or 3 times now.
Right. Well, I like what happened to this company this year? Like, I'm really curious. I mean, like this is not so for something like this, right? Like this is not TA-able for me, right? For me, this is more fundamental.
I don't know. Well, we don't know because hold on a second. I'm positive this will be TA-able.
Can you put MRI on?
There you go.
Oh, Jesus Christ! Look at the top.
Yeah. Second run. It's always TA. There's always TA. Very, 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 very rarely does it.
Okay. No. I mean, look. There's TA and there's TA, right? So yes, the MRI calls the top perfectly. So I'm exiting at the top. Had I known this company existed, right, I would be calling for the top, right? And obviously, I would be bullish at the green star, right? Like I'm not as bullish on whatever that candle is, the MRI top candle. Nope, not that one. The prior one.
Oh, the prior
one. MRI top. MRI top. Right. So I'm not bullish on that candle because it's an MRI top. And I'm never bullish on the candle following the MRI top, right? So the next candle, I'm like, shit, we're breaking out, but the MRI is concerning. And then the candle after, I'm bullish. But now I got a problem, right? I'm finally get to be bullish, but we're 2x where we were 2 weeks ago, and now I don't chase. So I'm kind of stuck in no man's land, right? Maybe the monthly chart would look nice, but in general, like no matter how I slice it, and I'm a TA guy. I'm a complete TA guy through and through, but I will never admit to TA calling 400% moves and then TA calling 80% corrections. These are fundamental trends. This is something, government contracts, a company going viral, company, getting Elon Musk on their board. Like these are massive fundamental shifts.
So, the run to NVIDIA, if I pull that up, topped almost precisely at the 5.618 Fibonacci extension. Like,
okay, no, I'm sorry. Yes, sure. Things can top with TA, but I'm talking. Oh, Mark, your camera is so out of focus. Maybe you can like put your hand on your camera for a minute and then pull it away. That didn't help. Okay, so sure. TA can call a top, right? But TA can also help you in identifying dips. TA could call a breakout, and TA could potentially give you an idea of how high you can go. But in general, other than Bitcoin, maybe the only exception, but in general, TA doesn't help you with 1,000% up moves and 80% down moves. It is just like I'm not going to sit here. I may sit here and, say how perfectly I would have taken the exit in March of 2024, but never would I have thought that we would fall 80%. Well, like maybe 20%. Anyway, I'm just saying, like a stock that's this volatile, I would have trouble TAing. Pre-Pete Ponia is asking, Tone, weren't you mega bullish 4 hours ago? Yes, I was. Like I thought we've already discussed that in this episode. All right. Anyway, sorry, I was totally getting distracted. Also, I do have to go, and we got to wrap this up. Sorry, I didn't mean to interrupt. Go on. Mark, I don't hear you at all. If you're here, then we don't hear you. Oh, someone is saying they didn't pass an audit. Yeah, that can happen. Like I said, this was driven by a fundamental change. This was not driven by technical analysis. This 85% move. That was a fundamental change, and clearly, like not passing an audit and having your auditor say we want nothing to do with this company, will do it.
Hey Tom, can you hear me?
I hear you. Yeah.
Okay. Well,
your camera's fucked, but we hear you.
I got to get a new one. But I tried refocusing it and it didn't work. But this we can wrap up kind of with this idea. Hey, we are trading. Bitcoin is trading sideways into a parabola. Time is getting short. 90K kind of has to be the bottom, and then we need to see something very similar to what happened here in January 2024 of several bullish weeks taking the price off. Now, the reason that I did bring this up because I have been interested in it. I've not jumped in it, but perfect 85% correction out of a long-standing parabola, a W bottom with a higher low, and then prices getting rejected at the 618, taken from this high down to this low right now, which is kind of to be expected. But $62, I've got several different moving averages lining up at 62. So I don't like this weekly candle. It's closing almost like a shooting star. So I'm going to hold off on this. And then I was just showing, hey, from this current price. So if this bottom happens to hold and we get a dip, maybe fill this gap at 50, it is 120% move back to the prior all-time high. I do like this bottom, and I do like breaking out of this trend line right here on the daily chart. It was tested, but not strong. So anyways, we'll see. But Tom, before we go really quick, let me just show you what we're going to
Wait. Oh shit, you changed charts.
I go back.
Right, since can you go back to the daily? I want to see, is this the daily or the weekly? Daily. Can you put the MRI on and zoom in on the top? I want to see if the daily aligned with the weekly at the top.
Oh, at that top?
But you have to zoom in. I can't see the candles.
Let's see.
No, that's a consolidated top. I don't like it. No.
Yeah,
too bad.
Hard. That one was hard to match on daily.
Yeah, that's also consolidated top. That would be hard for me to trade on the daily. Yeah, that would be
hard. Yeah, we could probably find another time frame, but so Tone, this is what I'm going to be watching. You like that 55 moving average, and I will show you first of all really quick why I'm not mega bearish yet, even though, I mean, look, anytime the price is still above the weekly 21 EMA, it's bullish. Like, that's just bullish by nature. But let me put on a couple of key moving average crosses. This is the 200 EMA above the SMA on weekly, okay? Fresh cross. Occasionally or rarely, the top is in at a cross like this, okay? That is very possible. That is incredibly possible that this is what's happening. However, if I go back to throughout history, we can see this is exactly what happened right at the bullish cross in March of 2017. And like magic, when I put the 21 EMA on, that was the buy. That was it. So we got a fresh cross, dropped to the 21 EMA. The price was $950. Launched the price straight away to $3,000. So am I going to be considering buying the 21 EMA on a fresh cross? Hell yes, I am. And right here, this wasn't necessarily a cross because the moving averages never really did cross. I'm talking about this consolidation in 2020, this swerve sideways. But in essence, they almost did cross here. Same thing, a drop down to the 21 EMA. That was at $10,000. Consolidate for a few weeks, and the price launched. So this is a mega bullish cross to me. It's still suggesting that there is a lot of fuel left in the uptrend. And I'm going to throw the one bearish argument into that is time related. Okay, this is the we don't need the other moving averages. Okay, we're back to the 55, 55, 55 EMA, 55 SMA. Right here in October of 2024, this is an anomaly from history. We did get the moving averages crossed, and this might happen again up here in late March. But going back through history, anytime that cross has happened, with that one exception, there's not many examples, but they are there. That has been end of the trend. That is called the market top. It's over. This cross took place in October at almost the high of 2021. That was a bear market. COVID crash. The cross took place, however, price was 50% below it. That is when the price is 50% below a cross like that, you almost have to buy it. Here's 2020. Here's the bearish cross taking place in June in the $7,500 mark. We get closes below resistance, end of trend, bull market is over. And again here in March of 2014, same thing. Once the green moving average, the light green 55 EMA, once it crosses below and is proven to be resistance, that ends the bear market. So I have projected these moving averages to cross, and what's happening right now is not helping. Right here, I projected them to cross in March, early April, and $80,000, and we would need to see something like this happen. This is the one anomaly. So I'm not going to be willing to throw in the towel with that fresh bullish cross, but I don't like this. I really wanted this week to be bullish, and then to start pulling this moving average away, and we would be on our way. So we will monitor that into the future, and that's about all that I have. All right, Tone? Can't hear you if you're muted. You might be muted.
Yeah, I was muted. All right.
Okay.
So yeah, it's pretty much time to wrap it up, other than give us your short-term outlook for Bitcoin, let's say for the next 3 days, and give us a longer-term outlook for Bitcoin. Say, what are you expecting on April 1st?
On April 1st. Okay, so I think in the next 3 days, we're going to see this area of around $97,000 resistance, and the price is going to trend closer to 94, maybe somewhere between 92 and 94. And then I think ultimately, depending on the close on Sunday, I don't think this low here from February 3rd is going to hold. But it might be more of like a double bottom, maybe close to, maybe this low gets tested again, and I'm thinking that's going to be it by the end of by the beginning of April or end of April.
Okay.
What do you think? Are you asking about early April or end of April?
I mean, it's up to you, right? I just said April 1st, but it's up to you. If you wanna give us analysis till May 1st, that's okay.
No, April 1st. That kind of gets us through Q1. If 90K holds, I think it's possible to see the price close to 120,000 into April.
All right. So you're bullish on end of Q1.
I am, until proven otherwise.
Okay. All right. Awesome. All right. I think that's a good way to leave it. Hey guys, Mark, if you wanna, actually, I can end screen share.
Yeah.
And let me pull up your Telegram channel. So if you got, oh no, wait, you don't need to cut your camera. I was just ending your.
No, I know, but my camera's all blurry.
Your camera's out of focus. No, it's okay. I mean, look, it is what it is. And
normally, if I turn it off and turn it back on, it reads.
No, don't worry about it, Mark. I'm ending the show in 30 seconds. It's fine. Doesn't matter. Hey guys, that is the QR code for you to scan if you want to join Mark's Telegram Signal channel through the Financial Summit. And yeah, that's one way to reach out and connect with Mark. And hope Mark continues to make amazing signals and keeps bringing you more and more of his thoughts on the price of Bitcoin as we continue to do content here. Don't forget to check out the Financial Summit in Maldives. I will continue to try to convince Mark to join us out there in the Maldives. I know it's a little far from where he lives. And thank you all for watching, and see you all on the next one. Bye, guys.
Later.